Hi, welcome to ACCA lectures. Today we're going to talk about the segment reporting. Hope you enjoyed it. Okay, so we'll talk about segment reporting. Segment reporting is the way you manage your company. So it helps the managers to operate the company, and also that information is very useful to financial statement users because they want to know how you manage it by product, by geographic, by different BUs, right? So this is an example for Apple. So Apple managed the business by geographic. They got Americans, Europe, Greater China, because China weighted a lot in their overall revenue, and Japanese also like Apple, and the rest of Asia Pacific. So as you can see, those areas, they really love apples, right? So that is why Apple managed the business in this way. And IFRS 8 requires an entity to especially for the if the equity or debt were public traded, so those companies should disclose the those information to users. And so the operating segment would be basically the profit centers, like how you manage your company, and for each operating segment, they might have different locations, different service, different product. So that will be how you distinguish each of your business activities, and those segments will be reviewed by your decision maker. Say decision makers will manage the operation by different BUs or different region. That will be your segment. And so we should choose one of the dimension, but we should choose basically only one. For example, we choose product, service, or geographical, and which can best enable user to understand the business. So it can be your different products or different locations. So some parts of an entity is not an operation segment. For example, headquarters and other cost centers, because you cannot. But some company also do that. But basically, those segments should be in the profit center. They should have the cash flow of their own. Then the users can evaluate how the company is making money and whether the segment is doing a good performance or not. So for cost centers, basically it should not be a operating segment. And if it's a pension plan, it's not an operation segment, it's a plan. So we only evaluate a pension plan by the net asset, which is the surplus, or the net liability, which is the deficit of the DBP or DCP, right? And aggregations. So for similar items, we can aggregate that, but we should balance between the detailed information. If it's pretty much in details, it won't help your financial users. But if it's too general, it makes no sense, right? So then that is why we should aggregate by product and service, or different process, or your different group of customers, your distribution channels. And but here's our threshold to make sure it's not too detailed or it's not too general. So the first of all is the 10% test. So if any of the three items, three criteria can be met, then you will be fine. For example, if we consider the external plus internal sales, so that means all your booking sales is higher than 10%, then this operation should be a segment operation. And or if the profit is more than 10% of the overall profitable segment, it should be a segment. Or the loss is more than 10% of the overall loss segment, then you should separately represent it. Or if it's more than 10% of your combined assets, then you should it should be a segment. And eventually we should evaluate the total external revenue, because all the if we add up all the separated segment together, they should represent more than 75% of your external revenue. So that in that way, we can make sure it's not too much in details and not too general. So here's an example. We have a different allocation, different segment, and we are going to use the 10% total revenue. So here is an internal and external together. And then we're going to test a profit, and we're going to test the asset. So if it's more than 10%, then we represent as a yes. If it's less than 10%, then we represent it as a no. So if there's any yes, then this one should be a yes. So for Europe, it's a yes because we got 2Y. And Middle East, it's a no because each of the thresholds we did not meet the threshold. And Asia, yes. North America, yes. Central America and South America, no. Okay. So that means we have 3 segments: Europe, Asia, and North America. And together, we should add up the total external revenue, and the total external revenue is 79%. That means we are good to represent the 3 segments separately from the rest of business. So we should make sure that we use the external and internal sales for the 10% test, and we should use the external for the 75% test. So here we have a BASF group reporting for 2020. So they got chemicals, materials, they got industry solutions, surface technology, nutrition and care, and agriculture solutions. So that would be the way they manage the business is by product and service. So that would be a different kind of representation. So and we should disclose which factors we use to identify the segment and types of products and service sold by each segment. And information of each segment, we should have the basic financial information, like the total P&L. It could be very simple, like the total revenue, total operation profit, total asset and liability. That would be all. It don't have to be in pretty much details like our formal P&L. It can be very simple, like sales, EBITDA, EBIT before special items, something like that. Could be very simple. But that really helps financial statement users understand the business, which part is good, which part is bad. That really helps. So for Coca-Cola and Pepsi, these two are very similar company, and they have very similar product. So for Coca-Cola, they manage the business purely by, basically purely by the regions. They got Europe, Middle East, Africa, Latin America, North America, Asia, and global ventures. Global ventures basically means the coffee store Costa, right? And they have different bottling investment to about 5 regions bottling operator. So this is how they manage their business. And for Pepsi Coke, they have FLNA, that would be for the convenient food. And for QFNA, that would be for a brand named Quaker. So for Quaker food, that would be this BU. And then PBNA, that would be Pepsi Cola for North America. And then the rest, and they manage it by the area, like Latin America, Europe, America, and Asia Pac. Okay. So this is the way they represent their segment, and that would be the same way they manage their business. So of course the segment reporting has limitations. For example, the trading between segments may distort the result, especially when it's not in a fair way, it's not an arm's length. And segment reflect the way it's managed, but that makes it difficult to compare. So for Coca-Cola and Pepsi, although they are like 90% similar company, but as you can see, it's different to compare, because they manage the business so differently, partially by product and partially by region. So that makes it difficult to compare. And then management might add loss-making segment into a large but profitable segment. So that means they can hide certain bad performance into a good performance but bigger segment. So they can hide the garbage, right? And over aggregate segment reduce details. So of course there are many other segments. So those segments could be disappeared because we only reflect the 75% external as a separate segment, but the rest of 25% you won't see it. It's in other, right? So you won't see the details. And common cost may be manipulated by allocating to each segment, because for those segments we have a headquarter overhead, and those headquarter are pure cost center, right? So you're going to allocate the cost to each of the profit center, to each of the BU, but the allocation can be very different or can be manipulated.